All right, so tip number 6, we're going to dive right into probably the most effective, most important thing for a pressure washer. Are you maximizing an S Corp? Are you doing what you need to do to make sure that not only are you converted to an S Corp, set up as an S Corp, but you're maximizing its tax deductibility. You're maximizing trying to take the legally required reasonable salary, but also reducing. And, I'm just going to hand it off to Drake here in just a second. But just so you know, folks, if you are not getting an accountant working throughout the year to manage your net profit with your reasonable salary, to maximize the S Corp, you're going to end up overpaying in Social Security taxes and Medicare taxes. And I've seen this time and time again with folks that we work with. You might be making $80,000 or $50,000 or $150,000. It's very often we'll find people that might have set up an S Corp. They're not doing it properly. We run through and do the numbers, and seriously, we find $3,000 to $10,000 a year in Social Security and Medicare tax savings. There's still all the income tax savings that you can generate and whatnot, but I'm telling you, if you don't have somebody coming to the table with ideas to reduce your taxes, and if they're not managing this tension of an S Corp and making sure you run it compliantly, and then helping you pay in taxes and everything, you're probably getting hosed. And let's remember real quick before I hand it off to Drake to walk us through the S Corp and what you do, but these are bottom line taxes. So if you save $10,000 in taxes, you got to remember that what are you running, a 15% net profit? Yep. How much revenue that represents. When you pay more in taxes than what it's worth, it is absolutely going to kill your business. You have to proactively manage your tax bill. You also have to make wise investments, which we're going to get that in another point. But if you're not if you don't have an S Corp expert, coming alongside your business to make sure you're getting the most out of it and you're overpaying in tax, it's huge and it kills your business. Like wise business owners that cause upward scaling momentum don't overpay in Social Security and Medicare tax. But Drake, why don't you walk us through everything from you can set up and convert. Like, how do you become an S Corp? What are the options? What if I'm already a business? How do I know if I'm an S Corp? And then walk us through some of these tensions of how do you get the most out of an S Corp and what do you do? And we'll try and be as quick on this, guys, as we can.
Yeah. So an S Corp's the slam dunk maneuver. Any operating business that's making $50,000 to $60,000 in profit. I mean, this is a home run hitter right here to save in taxes. And if you're not getting this advice, you don't have an accountant that's worth half their weight in salt. Yep. I mean, this is a slam dunk move that everybody should make. And if you're an LLC, there is no tax for an LLC. So this is where people get confused, Rob, is they think, well, I'm an LLC. Do I got to convert my entity type? And that sounds like a lot of work. Most of you out there are probably an LLC and you're probably taxed on your personal return. You can elect to be taxed as an S Corp. It's a simple filing. We'll help you walk through it. But it's like Rob was saying, I mean, we can easily find $3,000 to $10,000 in tax savings by making this simple switch. What does it mean on the nuts and bolts? As an S Corp, you have to take a salary when you are an owner of the business. So the standard is from the IRS is a reasonable salary. What the heck is that? And why is that important? Well, we're talking about saving this self-employment tax. When you take a salary, when you take a wage from a business, you pay self-employment tax. When you're self-employed and you're taxed on your personal return, all the profit from your business is taxed at your tax rate, plus this 15.3% self-employment tax. Yep. When you're an employee, you pay that through your payroll tax. However, in your business, if we switch it over to an S Corp, this is where we get the savings, that bottom line profit, not subject to self-employment tax. But a couple things, we got to have a reasonable salary. We can't make our salary $1. That's not very reasonable. And two, we got to make sure that we're actively processing payroll correctly. Payroll can be a pain in the butt to set up. It's one of the most miserable things. I absolutely hate it. We do it. And we typically outsource the setup, but we can handle all the process for you. However, once it's set up, it can be such a smooth, easy rolling thing. You probably need to have it for your employees anyways. And so really if there's additional costs, it's probably negligible, but we'll get that all set up for you. And now, I mean, we're talking, on average, $7,500 in savings is what we've found with our clients. And it doesn't change anything day-to-day operationally.
That doesn't take a ton of net profits either. These are mid-range size businesses. You save $7,000 a year. If you're making 80, 90K. Like this isn't huge in terms of like how big of a business you have to do. People are always like, oh, I'm going to save so much in taxes. Yeah, for big businesses. No, this is for your regular guy. So if we just clarify this, and we'll end this real quick. In an S Corp versus a Schedule C or an LLC, both of them, you have to pay these self-employment taxes, which is Social Security and Medicare. Those equal 15.3%. It's 12.4% for Social Security, 2.9% to Medicare. You would pay that if you're Schedule C, regular LLC, just the way you are before you become an S Corp. You pay that 100% all the way up until the Social Security limit, which is 147 something like that. And then after that, you'd only pay Medicare. Then you pay income tax. Well, in an S Corp, your income gets split. You're going to work for your corporation and they're going to pay you a salary that's reasonable for the type of work that you do. And then you're going to take this owner's distribution or dividend. The owner's distribution is not subject to the self-employment tax, but the salary is. Therefore, what happens is you want to take as low of a salary as possible, but the IRS says, doggone it, you got to pay yourself appropriately a reasonable salary for how you participate in the business. So the goal is to obey the IRS rules and take as low of a salary that's appropriate for your working. And that's where you bring wisdom to that dynamic. Folks, people make mistakes on this all the time. And I don't know how many IRS agents actually got hired. I'd be willing to bet it's a heck of a lot more than what they alluded to. And this is where they're starting to press in and trying to get folks. If you're not managing the tension in your S Corp properly, chances are you're going to get audited. Not only that, chances are you're going to overpay in tax. And then what's really cool is, Drake, at Performance Financial, your outsourced accounting, you set up that payroll and then you're paying in their taxes through the year. So they don't fall behind. They end the year on time, on budget, not owing anything, not giving the IRS a free loan. And you just, meanwhile, you're doing all the screwing around. So folks, if you're not maximizing an S Corp, anything you got to throw on top of that? I mean,
yeah, the only thing I would say is if you want this to be a business and not a job, this is what you need to do, because you're working at your business, but ultimately it's treating your business as an investment, right? If you're out there saying, I want this to grow, I want this to be a real business, you need to be an S Corp.
Oh yeah, absolutely. Got to be an S Corp. So now we're going to dive into a couple of these other ones. We will do an S Corp evaluation. We'll look at last year's tax returns. We will find out if you should be an S Corp, how much money you're leaving on the table. Plus, we got all sorts of other ideas. Hiring your kids, using simple IRAs, SEP IRAs, solo 401ks. We can do these Augusta rules. There are other things to reduce taxes that Drake is like, even though he's got the mullet, I'm telling you, he knows how to save you money, and that's how you build a real business. So we'll get on to the rest of these.